Good morning, traders. Thank God it is Friday. And it's going to be a bit of a special Friday today, obviously, as we know what's going to happen later on today, tonight even, about that meeting between Mr. Trump and Putin. But of course, I will come back to that a bit later. First of all, a bit of goodies, bit of commercials here. You can still join us for a 40% discount on your monthly subscriptions. That is still ongoing. You can see the link here. Just go onto our home page on the web, and you can sign up from there straight away. You can also still add your name to our mailing list, where you get regular updates on the changes that are coming in our community, and also be enlisted for a sweepstake where you can win a trader funding program account and a coaching session with one of our house coaches. If so, you can choose which one, I think, among all the coaches. So no time to waste. Put your name and email address on there, and you could get our newsletter in your mailbox, only needing to enlist once. Once you're on there, you will get our newsletter every time we are sending one out. Right, that is it for the commercials. And now let's move on to what was happening overnight. And first of all, seems to be a daily occurrence now that Mr. Treasurer, who is now officially the public relations man of the United States, Besant, is gave his daily show yesterday again calling for a series of rate cuts by the Federal Reserve. And then a lot of other stuff going on around crypto, not going to be buying it, will use confiscated assets, but they're also going to stop selling Bitcoin holdings. It's just, he's a bit of a market mover, this guy now. He also likes to toy around with Bitcoin, no doubt. He also had again comments on what the tariffs may bring. He said that August and September will be a good test for the tariff revenues. There's a chance of taking in substantially more than the $300 billion they were earlier talking about. So that remains to be seen once we get those numbers, obviously. So that for Besant yesterday. Then we also had a few Fed speakers, and one of them was Musalem, and he said the inflation is running close to 3%. Tariffs aren't feeding through to inflation now. Most of the tariffs' impact on inflation are expected to fade within 6 to 9 months, but inflation could remain more persistent. He is one of the hawks on the Fed board, by the way. So it's not a surprise that he also continues about the labor market being at full employment. And then he had this interesting line saying that it's reasonable to expect the payroll break-even rate now to be below 50,000. And that's important for the NFP readings, obviously, because bringing that break-even rate lower means that it's going to take less than expected. I mean, the numbers flying around up to now were like more in the 70 to 80,000 range. So market perception, if he succeeds to convince the market that that is the rate now that we should, or the number that we should be looking at now for growth or destruction of jobs, is indeed below or around that 50K, that will obviously change the perception for the upcoming NFP data as well, which are, as we know, going to be very important going into the next Fed meeting. Speaking about the Fed meeting, Powell's intervention ahead of that at the Jackson Hole next week on the 22nd will be at 10 a.m. Eastern time. Usually we get some sort of a pre-text, but I don't think it is really a guarantee to get the text. If I recall well, last year, the text, which usually comes out a little bit ahead, just came out as he started to speak, actually. So we may not have the advance warning of what he will be talking about at Jackson Hole, but obviously the whole market will be paying extremely close attention to what he has to say next week. But that will be before we get the next NFP report. Okay. We had, oh yeah, and then just to finish on Musanim, he said that the inflation could be persistent, but it is not his base case, talking about that 6 to 9 months impact. But he also said that the economy is not supporting a half point rate cut right now. So we know that the debate was open, but after the last inflation data, it would now be a bit of a surprise if the Fed would go really for the 50 BPs. Later on in the day, we had Barkin for a third round of comments. Barking is a non-voter. Muslim is a voter, but Barking is a non-voter at the FOMC meeting, so that is to be taken into account as well. But he said, and that's perhaps a bit of a hint at what is to come this afternoon. We will see. But he said that the credit card and other data provides the sense that the July consumer data may be stronger. And as we know, a bit later on today, we will have the July retail sales. So is he giving us a hint that those retail sales will be a bit stronger? Well, we will see when those numbers come out this afternoon, obviously. Um, about the shedding and hiring, he said that businesses held back on hiring, and so they may not have to shed much jobs either. So that is a bit of a thought of his that may explain the lower hiring may also mean that they have less jobs to cut, but as we have seen already by quite a few companies, that they are still letting people go. Okay. He did give a warning though that as baby boomers exit the workforce, he sees a potential demographic cliff coming. And that, of course, counters completely the argument of seeing uh, better jobs and whatever. So he gave a bit of a warning there. Of course, this is not going to show in one report, but will be a long spun out process. Obviously, all those baby boomers are not leaving the workforce at once. Moving on, we have heard from the Japanese Finance Minister Kato. He had no comment on Besant, and he is still trying to be patient and says that they will need to see the impact of the trade deal to come. He expects the Bank of Japan to conduct policy to sustainably, stably hit the price target, and there is there is the important bit in close coordination with the government. And I've been talking about that so often already. Bank of Japan is a bit of a special case. Yes, they are independent, but since the start of Ueda's tenure, it was basically the first thing that him and the government said, that they were always going to be in close cooperation. So for anyone, including Mr. Besant, hoping for the Bank of Japan to proceed with rapid rate hikes, I think all those people need to revise their opinion a little bit. I've already been saying Bank of Japan is going to be a slow process, and they are not going to hike rates like a Fed or even ECB after when the inflation struck, hiking rates up to 3, 4, 5%. I mean, the best we can hope, I think, for the Bank of Japan is to over time take it to somewhere around 1%. Anything faster would be a real surprise. Akazawa also said that Besant is actually not asking Japan to to hike. the rates. Um, he also said that the trade deal that they signed, that well, no, the trade deal with the US is likely to lower the Japanese real GDP growth by 0.3 to 0.4%. That's interesting in the light of the numbers that we just saw, just came out overnight in Japan. And then the one where we always are, we still are waiting on is the signature. And Kazawa said, now, the US hasn't said when the executive order will come. Um, Somebody get them a paper napkin to write the deal down ASAP, please, because everybody is waiting for clarity, and especially the Japanese themselves, it seems. Okie dokie. Let's see what happened yesterday. So yesterday we had those PPI numbers out. They came out hot. They came out hot, but then we have to know that the biggest rise there was in portfolio management fees. That is a 5.8% or so rise, which has 2, 3 months ago was actually a -6 or -7%. It's quite volatile. It also depends a lot on moves in markets, etc. Whether those people can take more fees, etc. But the numbers that really are going to impact the PCE were, I would qualify them as more lukewarm, um, and would have a PCE impact of perhaps maybe 0.1, give it max 0.2 or so, I would say personally. So I think yesterday that PPI that came out gave a little bit of a, not going to say a false picture, but a picture that should still have us reflect a bit on the real impact. So I've also said that, to me at least, it gives the importance of the PPI is still a notch lower than what we can get on the CPI or the PCE data. So the impact that we saw yesterday, yes, it had an impact. The dollar was bought on the back of it because the yields were ticking higher as well. But we have seen in the meantime that that effect has already waned. Obviously, also because we are in front of a big, or supposedly big, risk event, so the market is adjusting positions. But I would also say that it is again a it again shows us that the impact of those data, certain data, are more or less like a number of hours instead of days or indeed weeks, and changing the big picture. Obviously, my personal view. We had the jobless claims out as well. Nothing to see there. Still hovering around the 220 to 25 mark on the initial jobless claims, the continuing claims, which ticked up last time, came back down a little bit. So no real dramas there either. And that was it for the data yesterday, right? Yeah, the balance sheet stable. Oh, normally it should have come down a little bit, no? Or is it just a month where not a lot is happening, perhaps? And then moving over to the overnight data, uh, business PMI in Kiwi land doing quite well. You wouldn't notice it when you look at the Kiwi dollar though. But that is a pretty decent number there. That shows that the businesses are doing relatively okay over there. Today's data, as I already mentioned, the Japanese GDP though is still supportive for the Bank of Japan. So this was a good surprise, because it came out on the year on year, it came out at 1%, where only 0.4% was expected. Even the revision went back into the prior revision, went back into positive. So those are positives for the Japanese economy. That is also regardless, sorry, of the price stability that the Bank of Japan is using as its main mandate, but we know that they also look very deeply into those wages. But the GDP is a pretty decent print there. The price index remained around the 3% level. It's a bit lower than the prior one, but it's still 3%, the price index, which is in the GDP, which is still well above where they are looking at in their expectations that the Bank of Japan is. So these are pretty decent numbers out of Japan, which explain the comeback of the Japanese yen overnight. Then we're moving over to the Chinese data, a sea of red. And I agree, those are not good numbers. Those are data that show that the Chinese economy is not roaring. Unemployment rate is going higher. The retail sales were coming in lower, industrial production is lower. But let's put it all in context compared to what's happening in the rest of the world, okay? If you look at the industrial production here in the month of July, it's 5.7% versus 6% expected. It's still a growth of 5.7%, okay? I mean, if you compare that to Germany, who printed a whopping -1% in the industrial production in the same month, we can put it into context. If you look at the retail sales, they are turning at 3.7%, obviously a percent lower, obviously a percent lower than expected, but the European retail sales were 0.3% to put it in context, okay? Um, but but I have to contradict myself there for just a bit. China needs higher higher production numbers, higher GDP, higher to just support their massive population as well, and so they are indeed weaker numbers in China there. Okay, but we've seen the impact on the Chinese yuan has been relatively subdued, but numbers like this may have an effect further down the road because it could push the People's Bank of China to do more to support the economy. Maybe also maybe we also see more construction aid, et cetera, in the real estate sector coming from the Chinese government because they will not like numbers like this to continue to print weaker data, of course. Okay. Right. What else? Oh yeah, then we had another round here. The industrial production. It's a bit volatile in Japan, but there again we had a positive data print there in Japan. So the numbers that came out today in Japan are relatively good for Japan. Okay. Now, what's next on the agenda for until the US numbers? There's not too much anymore that are going to move the market. I don't think the ECOFIN meetings are going to come up with any monstrous headlines. And then we're moving into the US data before tonight, Alaska meeting. Retail sales. Remember what I said about Barking? He thinks that the consumer is still doing okay based on those credit card and other data coming in still on the high side. We will see. But they are important data because it is the consumer, as I already said. And the Fed is looking at the consumer, obviously, in whatever decisions or measurements that they do in regards to the economy. Sorry. The first August data here on the New York Empire State Manufacturing, as usual, very volatile data. They can come out positive or negative at any month without really warning signals. It's expected to come in at -1.2. I don't know. I don't really know where it will come out there. I would say in this we got the export and import price index for July. That may be something that the market will look at in the light of the trade, the global trade, of course, and the inflation potentially, but we already had the CPI, we already had the PPI, so not sure that this is going to be a big market mover. Out of these three, I would still say that retail sales will be the most important one. We've got a bit of Canadian data there, but it's June data. Okay, Canada usually provides us with data which are a bit back-looking, I would say. And then we have later on industrial production capacity utilization in the United States. Could be a bit of a mover. And then we have the Michigan. Michigan is, as I said already, communicating versus data release. Okay, when the consumer expects a lower inflation, this number should show a better number, but the risk is that due to tariffs or so, we could have a bit of a pushback against lower inflation expectations. So maybe we see a bit of a strong print, and I don't know, in which case we should see the sentiment data come in a bit lower, okay? And that will be, and then we have the one of those 256 Atlanta Fed GDP now revisions coming in for Q3. Yeah, they will show whatever they will show, and the next number will probably be quite far away from where the actual one will be. And that is it for the data. So let's move over to what is going to happen, or perhaps more importantly, what is not going to happen tonight, and that is that Alaska meeting, obviously. So Trump and Putin will meet. They will meet 8:30 London time, 7:30 GMT. They are expected to give a press conference after that meeting. It's not yet decided whether it be a joint or not press conference, so we could have news from either side, but not a joint statement out of that meeting. That's for one. The most important thing is to know how long that meeting will last, because if you take into account that the markets will close an hour and a half, even the official market will close half an hour later, but the real close effects, etc., will close an hour later, and an hour and a half after the supposed start of the meeting, providing that they are not even having some delay there. There is a big risk that we don't get any headlines before the close. Okay, so the whole risk is it is possible that the whole risk, the wait is going to be on Sunday night, reopening Monday morning in the early stages of the market. So I suspect that once we get the data out of the way this afternoon, we are going to see a bit of a choppy market, let's say, because people will not want to run too much risk into the weekend. Now, the thing is, it could be, and then I'm going to say what Trump came up with yesterday. He said he doesn't know exactly what is if he's going to manage to get a ceasefire, but he said if the meeting is bad, he may know after just a few minutes. So that could actually tell us that the shorter the meeting, the worse it's probably going to be, and in which case we might actually get some headlines before the close. So be very, very careful with that. In regards to what may be decided, the Russians have already told us that they are not going or they are not expecting to sign anything today. So all the hopes about a ceasefire, an air truce, they have been pushed back a bit or crushed a bit. All those hopes. So it's the bar for a real positive meeting is higher than the one for a relatively negative meeting. Okay, so As already talked about in the chat room, it's a meeting to decide upon the next meeting. But if it's bad, there may not be a next meeting, as Trump already said. If it's the meeting is good, I will call Zelensky and the European leaders. If it's bad, I'm not going to call anyone. So if he comes out of that meeting relatively swiftly and or quickly and says that he's not going to call anyone, I think we can safely know or safely say that it's not it won't have been a good meeting. So the best outcome possible about an air truce, probably still that bar is very high. Right, let's have a look at markets. And first of all, I'm going to look at what I think, assuming that we don't get news before the close of day, what I think may be the biggest mover. I'm in the meantime reading your comments, guys. Conference Monsters. What do you expect reaction there after the conference and what results? Oh, okay. Oh, crypto. Okay, Michael, maybe I'll touch on crypto, but I'm not sure. Because I'm still not myself engaged in any crypto trading, but we maybe I'll touch briefly on then. Okay, the market that I think, besides crypto then, um, that could see the biggest move is gold, because gold, as I've already been saying so often, it is a hedge against everything that can go wrong. And also, if nothing is going wrong, if there's positives, it could also mean that gold is going to get a slap around the ears. Now, the levels, as I've been saying, and looking left here, this, and we can even look further. This is a 1 hour, but if you look at further on your longer time frames, on your higher time frames, you can see this zone here, 33, anything from 33.35 down to 33.10 has been a very big traffic zone. So I would say, first of all, look at what's happening around 33.05.10 and then 32.85 to know where gold is going to stop or where can it drop down to if we would get positive news. Okay, so in case of the more the news is positive, the deeper it can drop. And if the best is a ceasefire, of course. There's not going to be a territorial agreement today. I don't think that anyone is actually thinking that may be the case. The best we can get today is a ceasefire or an air truce, possibly. But again, the bar is high. So if we would get that positive, I would look at like 33.10, 32.85. But if you look a little bit further, um, there's not a big level waiting here, which is in around, well, 32.5, but then around 32 as well, which is going to be a very big level. So the better the news, the bigger the fall could be in gold when it reopens. Okay, if nothing is decided, or if they leave the meeting with slamming doors, let's say, then I think the 33.70.75 is going to be toast, and then we will have to look again at what happens around 34 figure 10. We need to respect those levels, but I think if really nothing happens over that meeting, unfortunately, there is a risk that there is a lot of drones flying around, so to speak, and that the situation over the weekend is going to be relatively bad in Ukraine. That is the risk. In which case, gold could actually go for a runner and see those prior highs around 34.5, 34.30, easily back as well. So I really think that there is a potential for gold to move quite a bit on this meeting. Okay, so be prepared. For those who have gold in position, just be prepared that there may be a very big move coming. And on equities as well, I think the global equities, and I'm just taking the S&P as an example, really. But on global equities, there will also be a reaction, I think, come um, Sunday night when the markets will reopen. And I would say like pay a bit attention if we get like those bigger moves. I'm looking at a pretty big trend line here, and this moving average as well on the 4 hour will come very close. And that's what it will be happening in case we got really bad news around 63.30, 63, the figure. Okay, I think that's now your new 6200 is probably around here, 63.20, 63.30, in case of bad news. If we get surprisingly good news, it's probably going to be the 6500 is toast, and we are going to move higher to 6560 or even 6600, which I've heard mentioning quite a bit. Okay, but just it's worth to look at this level here around 63, anywhere between 6300 and 6330. Okay, on the S&P, and just transpose it to other stock markets if you want, and especially also on the European markets. It's because Europe, obviously, Ukraine is at Europe's doorstep. So stuff that like the DAX, CAC, and all those ones, they will probably move quite a lot as well come the Sunday night open or the Monday official open for those who do not trade futures. Okay, so these are really two things outside of the real effects that I think are going to be big movers. Silver maybe to a lesser extent. Obviously, if the news is bad, it's probably going to get a slap around. It's going to underperform gold, and silver is likely going to trade maybe not completely opposite to gold because they kind of move somewhere together with each other. But as I've already been talking so often about silver being an industrial metal, or is always trading a little bit better when the situation is better as opposed to gold. So it's probably going to move in a distance. But if the news is relatively good, I can see silver hold up where gold is coming down, and inversely, if the move is really bad, gold should be the outperformer, okay? And silver perhaps going slower than gold in that case, okay? So um, this one should do a little better than gold if the news is relatively good, all right? Currencies. Well, I'm on the cable brand. I mean, I'm going to make you brand happy first of all. Um, there's a little bit of a fragile trend line showing up here around, which comes in around that 135, 2030. But obviously, that's not going to hold anything back later today, even not on the data, perhaps, because we have seen already a little bit of a move lower. I would go a little bit wider just on the day-to-day move, okay, just ahead of that Alaska meeting. Um, it could be that if we get a real good retail sales number, we are going to have a little retest here of the 134.90 figure or so. If the news is weaker, obviously that 135.90 that capped yesterday, it is still the gateway to go have a look at 136.5. I would be surprised that ahead of the Alaska meeting, we are getting bigger moves than that. Of course, always be prepared for the unexpected, but I would be a bit surprised. One that is living on a bit of hopium is the euro this morning, and we're finding it back in most of the European crosses this morning. Is it living on hopium, or is it just that euro is just doing a bit better? The hopium side would be that there is a bit of positive news coming out of that Alaska meeting, but also yesterday, where I thought there was maybe a potential to get down to 116 figure 10 or so. It held before, and it formed a new little bit of a trend line there, which is quite interesting because we started there again, not too far from Asian Open, and then gradually started to move higher. Um, I guess the market is running a bit short, perhaps. Euro, the very short-term market, and that is just people getting out of positions. But Euro is doing quite okay today. Um, what can we do going further? Okay, if the retail sales are a bit sluggish, we could see a retest of that higher level here, 117.30.50. But again, is this market having the power to do anything big before the Alaska meeting? If the market is short, yeah, of course we can run up to 117.80 on a bad set of data this afternoon. Um, but will it really have the volume and the power to break through? I'm a little in doubt. Okay, I think really we are, and as I was saying, in this kind of a range before going into that Alaska meeting. So I would suspect that somewhere around here, even if the data are weak, of course, not dramatic, that it would stop. If we get back down, keep an eye on that 116 and a half, 116.30 again, and then the lower end of the 116, the figure. Same here, unless we get like a monstrous beat of those retail sales. I doubt that there is more power in this market than to go have a look at the low 116, and then I rather see us trade somewhere in the middle. Um, Going into the Alaska meeting, Ali, you're saying like, what will Euro be heading towards 118, 120 on Trump-Putin Alaska deal? I've spoken about this thing. If you think about it's good for Europe, yeah, I think the euro dollar will rise now, but I think risk will rise quite a bit as well. So is the euro dollar your better instrument? Even if it is positive for Europe, don't forget that if Putin and Trump manages to broker a deal, there will be something for the US in there as well. And potentially the dollar may not do too fare too badly either. So I would rather take this Alaska thing as a risk event. And yes, bid for the euro dollar, but I'm thinking about, for instance, euro yen, euro sterling, euro something being relatively big. So really, we will need to see the market open. Um, well, I spoke about gold. Yeah, Ali. I think if the news is really good, it could actually tap 32 and a half. Also, that's somewhere the ballpark that I'm looking at. Um, so that for the euro dollar. Uh, Dollar yen then. Okay, we had this Besant move completely undone and a bit more, and then we had those GDP data out, um, putting the yen back onto a better footing. We also saw the crosses yen deflate a little bit. Yesterday we hit that 200 mark again in sterling yen. Now we're trading back at around 199 the figure. Those data were relatively positive. So if we see any, let's say, negative dollar news today, I wouldn't be surprised if we test those levels back that we saw yesterday. Can we go lower? Obviously, 145.80 or so. But going into that meeting later on today, it will be a risk event, and we know that even though yen has been decoupling from risk somewhat on the last moves, it can come back. Like yesterday, for instance, equity markets were going up. The Besant trade was unwound, but also it went further than actually before we entered or before he made all those comments. So if you think about risk, perhaps the dollar yen is going to find some sort of not going to say a complete base, but if the risk is positive, it's likely going to go down um, less fast than other dollars may do. and the yen crosses, for instance, do a bit better again. So I'm looking at the yen for this event to be risk related again. So maybe the best instrument won't be the dollar yen. Okay. Um, so I'm rather thinking about stuff like euro yen, for instance, which is consolidating, okay, between 173 and 171, okay. If we get a positive risk event, I guess we are going to gravitate back towards the 173 and there decide what's going to happen because we know it's a level from the past. If risk is really bad, that 171 is probably going to be toast, and we are going to have a look back under 170. And we can overlay a lot of those yen crosses. Each and every one can look at their own pair, but I think the yen pairs are going to be more related to risk. So the potential for crosses to move more is higher to me than the dollar yen, for instance. Okay, so this is how I look at it. Yeah, let's look at the Swiss because that is really frustrating, extremely frustrating. We've completely stopped in the Euro Swiss ahead of that 94.40, and we are trading back. Um, lower 94s. It's quite frustrating. It should be trading higher with all the positive risk in the equity markets. Again, this morning, Swiss data were not like overly supportive for Swiss franc either, I would say. Um, but it's still frustrating. So we really need to get through 94.40, 90, yeah, ideally through that prior high to continue to go. And I have a lot of questions about the dollar Swiss as well. Dollar Swiss is even more frustrating because we are back to that 80 and a half, 80, 60 zone, and we're having trouble to really steer too far away from it. Um, I'm not I'm not involved in this unless we really start to break ranges, right? 81.70, 81.85 is one level, or if it goes back below 80.15.20, it's going to look a bit iffy, right? And that could happen maybe on a risk off thing as well. But in the meantime, it's just very frustrating. I'm just keeping a little slice of Aussie Swiss, but it's nothing big either in case risk will do well. But if we get anywhere below 52, I'm gonna be out of there as well. What else? Aussie dollar, we are in the middle of the ballpark again, again. Yes, we are still seeing these 64.80s being in demand. Um, it's going to be about the US data, but as we've already mentioned so often, every break through 65 and a half is also difficulties to sustain. So this is really stuck for now, and we will need a decisive break of 64.80 or 65.60 and add 65.65 there to really start moving. And the Kiwi is showing pretty much the similar kind of thing as well today. Aussie yen, Fred. Um, yeah, I can have a look at that for you. I think we need to is building this kind of thing, no? Kind of here. Um, 92, 95, 20, 96, 90, but anything in between looking extremely neutral for me right now because we have done that spike, came back down, and now we are in the middle. The issue with Aussie yen is that the Aussie is having trouble to find the real direction. Okay, so amongst the yen pairs, it's not really my favorite right now. Um, unless we get a clean break. Okay, I think this one, nah, and I'm really not seeing too much to do here, unless we really start to break levels. And even if we go down here, look at this zone here between 93, 90. and 94 three quarters. What a big traffic zone that has been. So even on a breakdown, we may come down here and then trade around there. Obviously, it's a decent move. I'm not going to deny, but yeah, the prospect of a long-lasting move right now, yeah, we really are going to need to break those levels, Fred. I don't see too much happening there. There is one that Adam and I have been discussing in the room yesterday, and it's dollar Norway, and I think I already mentioned it um, on yesterday's meeting, right? This is starting to be a bit interesting as well because we are starting to produce the lower highs there. I'm not yet in a position, but I'm I'm watching what's happening here. Anywhere between 1017 and 1014 or so. It's a bit tough to start to initiate positions ahead of that Alaska meeting, obviously, because let's not forget that Russia is involved in oil as well. Brent is going to potentially move, but it does look like Brent may somewhere find a bit of support there as well. And the Norwegian Central Bank being behind us, CPI being behind us, there's little to really look out for in Norwegian kroner. So it's going to be a bit of a trader's market there, I think. Um, Ideally, I would like to see a retest of this 1023, $1024 Norway, but I'm starting to be interested in the short end maybe, and it's going to be a relatively low risk, but if you look at medium term, it's going to be a relatively low risk trade if I can get it here and put a stop somewhere around here, maybe a 1% risk on the top end, and then, but the downside could reopen because if you look at it longer term, we have been coming down, 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 but we actually never made it above really the 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 traffic zone that we have here, right? So that is just making me reflect on a potential trade here in dollar Norway. So that is the last goodie that I'm going to give you guys for this week. So again, don't be surprised to see a very choppy market once we have the US data this afternoon, okay? Um, Anything that happens may be completely out of the blue and really be a bit, you might wonder what is driving this or what is driving that. It's probably just going to be the market squaring up positions before the Alaska meeting tonight. Okay, so be careful out there. We could see a few moves, but then on Monday, obviously, we will see exactly where we stand, or perhaps we won't see anything at all if there are other meetings planned without any decisions. So trade safely. No horror stories, please, come Monday. And Ryan will be back on Monday, so we will back full steam on Monday. Have a very nice weekend. Thanks very much for being with me this end of the week, and we speak to each other on Monday again. Thank you, guys.